Hello, ladies and gentlemen. Welcome to the official YouTube channel of Ashika Financial Planners. I am Sandeep and I regularly produce useful content on personal finance to help you simplify your personal financial planning. In today's video, I'm going to be showing you how you calculate your returns on your mutual fund investments and also on your insurance investments. I hate to say this, but insurance is not investment, but you would have certain products from LIC or a few other insurance companies saving plans which promise you certain money back or certain investment returns, and I will show you how you can calculate that as well. Before we proceed, I request you to subscribe to my channel, like the video, and also please share this video after watching this. Right, so you must have been approached by LIC agents or insurance advisors of other private companies telling you that, we have a good investment plan for you. You need to pay 1 lakh a year for 10 years, wait for another 5 years, and then you would get a lump sum of 16 lakh or 17 lakh and so on. They always tend to talk in whole numbers, but not in terms of IRR, so the internal rate of return. Why this is very important, the IRR, is because you need to know how much returns you are getting every year of the investment. So that is the percentage that you have to compare with other investments, probably your bank deposits, probably mutual funds, and so on. So you should need to know how much annualized returns you are getting every year, and I'm going to show you how to do that. The other situation you would usually come across is your SIP investments. So, say you're investing 10,000 rupees a month and you want to know what is the annual return that you've been receiving on your SIP investments in the last 3 years or so. So to show you the calculation and how it's done on Excel, it's a simple method. And if you learn this, then you can always calculate your returns and be on top of the game.
In my very first example in this video, I am going to be talking about a hypothetical situation where an insurance agent has approached you with a policy. He says you need to pay 1 lakh rupees a year for 10 years, wait for another 5 years, and at the end of the fifth year, fifth waiting year, you will receive 16.5 lakh rupees. So I'm assuming that we are starting this investment on the 1st of July 2023. So I make 2 columns here, date and outflow / inflow. Then these dates are the dates on which you will be making the payment. So on 1st July 2023, you will make a payment of 1 lakh. And since that is an outflow going out of your account, I am going to enter it as minus 1 lakh. Right? And then the dates will continue, 1st July 2024, 1st July 2025. So this will go on for 10 years until 2032. Then there are 5 more years of waiting, so you will go until 2037. And then at the end of that year, which is the beginning of the next year, right? The end of the year 2037 to 2038, right? So 1st July, this is when you will actually receive the amount. So for 10 years, you need to pay 1 lakh. So this minus 1 lakh will be copied for 10 years. And then you don't pay anything for the next 5 years. And then at the end of the 5th year, in other words, the beginning of the 6th year, you will be getting 16,50,000. Right? So there is no minus here because this is an inflow, right? So it is technically a plus, and therefore there will be no minus here. And now what the agent will tell you is they will always talk in terms of whole numbers. So they will tell you that you pay 1 lakh a year for 10 years and then just wait for another 5 years. For having invested only 10 lakhs, you will be taking out 16.5 lakh. Now, while this sounds good to the ears, how does it, what kind of annual returns is this particular saving or this particular investment giving us? For that, you need to find out the XIRR, which is the extended internal rate of return. what is the annualized return that you will be getting on this investment? Is it 5%? Is it 4.5%? Is it 6? Is it 7? We will find out right now. So you just have to, if you want, you can write this down, XIRR, and then you have to click on this cell or any cell where you want the answer. It could even be this cell, it could be this cell, wherever you want the answer to be displayed. And you have to click on this insert function button right above these columns. You click on that and then another window opens. You have some options here. The ones that you recently used will come up here. If you haven't used any of them, you just have to go here and type XIRR, and when you do that and click go, it will select XIRR. So now the function has been selected because there is a blue line here. So this means XIRR has been selected, and you just have to click on OK. So there are two things that you need to fill here: values and dates. Now values are the amounts, right, that you have paid, and what is the amount you're going to get at the end of the period. All that you need to do is click on the first value and just drag it right till this point, which mentions the maturity amount of 16.5 lakh. So it has selected the cell values B2 to B17. Now you need to select the dates on which the outflow and the inflow happens. So you click here and then come here, click on the first date and just drag it down to the very last date. There you go, A2 to A17. So this has been selected, and all that you have to do is click on OK. So you got a number here, right? 0.047. So this has to be converted to a percentage. All that you have to do is go up to your menu bar and then click on the percentage. Now this converts it into 5%. Actually, it's better to show at least 2 decimal places, because this by default is rounding off the decimal places. So we need to just click on the option above, which increases the decimal places, and you can see that it is 4.79%. There's just the other way you just do that is you have this value here, and then you just have to multiply that value into 100 to show you what exactly is the percentage return you are getting on that investment. And here you go. This is the exact return per year on your investment. It is 4.79. This is the internal rate of return, and this is how much you are getting on the investment. So now this is what your insurance agent would try to make you believe, that you are actually spending 1 lakh a year and getting this amount. Although they're not going to talk about the percentages, you will be made to believe that you are actually investing just 10 lakhs. But in reality, you would be also paying the GST amount, which is 4.5% in the first year and 2.25% from the second year onwards. So 2.25 second year till the 10th year. So this GST amount is something that will be going out of your account, your pocket. So therefore it is your outgo, your expenditure. So in reality, you need to be calculating what returns you get for what money you're spending. So it won't be just the 10 lakhs, it will be a little more than that. So that will be your 1 lakh, right? Plus the tax amount, which is 4.5% a year. Okay, and in this case, it would be your 1 lakh into 1.0225, which is the extra GST amount. So this is the actual amount that you'll be paying from second year to the 10th year. And you can also do a total year and see how much extra you'll be paying. So you would actually be paying 24,750 more over the 10 years. So you need to actually calculate how much your returns are for this amount that you're spending. This is actually the realistic returns that you are getting for your investment. So now to calculate the returns, we follow the same method. You need to click on this insert function key here, select XIRR, say OK. The values will be these values with the GST, and the dates would be the same. Select all the dates on the left hand side. So you see that the right cells have been selected here, and say OK. So you get 0.045. So it's obviously you just have to multiply this value into 100 to get the exact return percentage. So now you can see that 4.55% is actually what you are getting in, not even 4.79, because you are, from your point of view, you are spending more money here, and not just the 1 lakh every year. So this is how you calculate your returns percentage for your insurance investment. And now let's look at the mutual fund investments, the SIPs. So once again, I'm just taking a hypothetical situation. You're investing in SIP. Probably you invested in SIP in 2021, 2 years back, 1st July, and then you were investing 10,000 every month, and you invested for 2 whole years. So that's like 2.4 lakh. And now let's add another 10% to 2.4 lakh, right? So that would be another 24,000. So you'll be having 2.4 lakh as the total investment plus another 24,000. So which means, let's say your current value as of 1st July 2023 will be 2,64,000. So generally people would believe that, if they have invested 2,40,000, that is 10,000 every month for 2 years, and if they have gained 24,000, the belief is that they have actually earned 10% returns. That is not true, because each of these SIPs are invested for different periods. This investment of 10,000 is invested for 2 years. This is for 2 years, less than 2 years, like 1 year and 11 months. And the last investment is invested only for 1 month. So each of them would have a different rate of return. And then we have to combine all of them and find out what this SIP has actually given me in this last 2 years. What is the XIRR? That's the most correct metric that you need to get to analyze how your investment is doing. So let's say your current value of your SIP is 2,64,000, and we need to find out the XIRR. Similar, exactly the same thing. Insert function, choose the XIRR, say OK. Then the values, click on this section and select all the values right to the end, and then select the dates, and then you select all the dates and just say OK. There you go, 0.095, whatever. You just have to look at it in terms of percentages. So you just multiply that into 100 to get the exact return. So this is the actual return that your investment has been delivering, 9.45%, and not 10% as you would have imagined. Now, let's say you want to do a calculation and say, what if my investments were worth 3 lakh today? So you just come here and change the value to 3 lakh, and let's see what happens. So the percentage has just changed, right, to 23%. That is what your mutual fund investments are doing. So just look at the massive difference between 2.6 to 3 lakh. Let's say it was 2,85,000, and then your interest, your XIRR, your returns is 17.48%. So this is how you calculate XIRR for your investments.
I hope you found this useful. I thank you for watching this video, and I'm going to thank you in advance for sharing it with your friends and family and well-wishers. Until next time, see you. My name is Sandeep, and I'll catch you very soon.